total net buying, it's in green. 74 contracts to the plus side on that particular bar. Greg, call me after this is over. We'll go over it. I don't know what the question is. Okay, lower high, lower low, volume lower than the preceding day. If we were to look at this screen, the F1 screen, the daily one, lower high, lower low, volume lower than the preceding day, be looking to sell into strength. Looking at the F2 screen, they're not going to be in agreement. Have a double distribution, one down and then one up. So this screen with a G split would say higher, buy weakness, test higher. If we leave it just the way it is right now, it's got a B shape with a volume lower. It would be saying sell into strength. So this one, the two screens are not congruent. So that would tell us that trading range tomorrow. So we could sell failure to take out today's high, the overnight session high, or we could buy weakness to see if we could extend the range up. Okay, there's lots of news tomorrow, and it could come in better than forecast, as it has been. A lot of people feel that Apple's new telephone, I don't even know what to call it. I think it's the 4S or something, was entirely accountable for the increase in retail sales. I mean, I don't know if that's true or not, but some people are attributing it to that. Okay, this is the note if we were to close at 130.10, right where we are right now. Got a higher high, higher low, volume higher in the distribution. This one would tell you higher tomorrow. Higher high, higher low, and volume is higher in the distribution. It would tell you to buy into weakness. If we were to look at the F2 screen, again, it's going to be not in agreement with the F1 screen because of a double distribution. The F2 screen would tell you to sell into strength. See if you could extend and take the market down based on an E-mini sideways to higher. So if we close the market at 10, right here, where might resistance lie? That would be 1. This would be 2. That would be 3. And this would be 4. Can make it as high as 22. To the downside, we got a session low of 7, so 7.8. So it'll split over here. At a wide period low right here. And then our 24 to 28. Okay, no matter what happens, the bottom's not going to fall out of this market because the Fed is keeping interest rates at 0.25%. So the aggressive sell, 1.5 to 1.9. I think if it goes over 20, we really don't want to trade. And there's a possible, well, let's do it this way. The aggressive sell is 11 to 15. And we'll see what happens. But that would be based on an E-mini sideways to up. If the E-mini is down, we'll be buying the 5 to 9 area. E-mini looks like it might close a little stronger right here. So lots of news tomorrow. CPI, core CPI, they won't pay any attention to it. Net long-term capital inflow last month was 57 billion. Probably won't be that high this month. Industrial production up 0.4. Capacity utilization 77.7 in a HB housing index. The industrial production, the capacity utilization could come in higher than forecast. The economic news has been stronger than forecast. So that's where we have it. If there are no questions, we'll see you. There's the last rotate. Here's your market number at 4, Mark. The last rotate down in A period was at 4. Do you see that single print A right there, Mark? You got it. Try to pick off these pivot lows in conjunction with high volume, low volume numbers, value area highs and lows, and market numbers. That's all there is to it.